Hey, happy Tuesday, everybody. It's May 23rd. Let me do a quick market update because we have some movement since basically earlier this morning's session and last night's session here in the US. You can kind of see that US equity markets are still looking, relatively good, right? Meta, one of the bigger cap tech companies, still looking pretty solid. Apple still looking pretty solid. Apple looks like it is basically wanting to break out of the highs from December, January 2022, right? So pretty damn close, maybe like 3-4% off. NASDAQ index also looks pretty solid to me. Looks like it's already above the August 2022 high, wanting to inch up higher towards maybe 14,500, somewhere up here. And then, of course, a bigger cap tech stock, which is Microsoft, also looks pretty solid. So all in all, I think this is giving the momentum to the market, on the equity side, right? And another way to look at it is simplistically, S&P 500. We broke above this 6-week-long consolidation that we had right here. We broke above it, which is around 4180. Not only that, we broke above the highs of the year, which was, February of earlier this year, right? Now the question is, can we stay above this level? And if so, where do we go next? Well, the next obvious spot is 4,300 points. And then after that, if we get above that, I would say a high of 4,500. Now, if you look around the web, you'll see all kinds of conversations about a lot of people are heavily short stocks, and especially, tech stocks or indices in US equity markets. And that could effectively, drive price higher to cause that big, short squeeze, right? That is one sort of big opinion that I know that's occurring around the landscape. Now, if that does happen, how do we relate this back to crypto? Well, let's sort of look back at crypto and see where we are. Contextually, price-wise, we're still, under a key level, which is 27.4. I've labeled this LIS, which is line in the sand. Why? Because if we dial out to, a daily point, right, there's that red line right there. You can see the importance of that red line dating back all the way here to March. I believe it's a structural low here in the market. And if we can maintain this low, because we've effectively, with this candle, swept this and all this crap over here. And this should, in my opinion, allow a propulsion back up to 29K. Now, if it doesn't, and let's just say we turn around and crap the bed, I think it's probably over for a while, and we're probably going to 25K, maybe even lower, right? So that's the ultimate point of, the current market outlook, which is that I believe here, this is a local reaccumulation phase in which I believe we're going to go back up to 29K and maybe even higher. All right. That's my ultimate outlook that I've talked about for several days now, right? And another way to look at the market is two different charts that I have, ranges, right? I've talked about this. You can kind of see this triangle. I told y'all that, I did not believe that this triangle is going to resolve down. If it did, it may have been, maybe something like this and then squeeze back up. But we're already getting, a pushback outside the triangle. Now, be careful with these triangle pushes, because sometimes I've seen situations where you'll see this triangle sort of resolve like this and then quick collapse back down. And then it begins its next leg up by clearing out stops from here, and everybody who longed up here basically gets wiped out down here. And then the market begins its either big leg up or a big, mean reversion back up. Okay, so look out for situations like that. Point is, the market is still in a very tricky, finicky area, and you should be very wary of situations where you may get trapped and baited into these, whipsaw conditions. Another way to look at the market is this Bybit chart that I have, right? I believe these two white lines are creating somewhat of a funnel, a falling wedge, if you will. And I especially love falling wedges when you start seeing the wedge not only contract, but then the last little bit of the edge, you start seeing the market go sideways where we've tapped the bottom of the wedge and we start going towards, drifting towards the top of the wedge. This is your area of reaccumulation. And the sooner you recognize it, the better. Even if, let's just say, you see this and then quick downside, I think this is another opportunity to add right there, because we've already talked about this, right? Not only is this a bottom of the wedge area tap again, we have the opportunity for tapping this ascending trend line structure, which in my opinion would be a solid buying opportunity or a solid add opportunity, okay, from here like this. And I still believe that that could take us back to 2021 yearly open or somewhere, you know, close to this high around 28.5, something like that. And quite possibly, you know, maybe even higher, all the way up to 32K, right? But either way, I did not see the market from here showing me signs that, all right, you know, we're ready to nuke to 23 or 20K or anything like that, at least not yet, unless something, you know, disastrously bad happens. Okay. So that's my overall outlook. And again, you know, the moving averages kind of confirm that too, right? I've talked about this before. If we go on the weekly chart here, the weekly chart will show you that there's the, whoops, turned on the wrong. There's a 200 weekly moving average, MA, and there's the 200 EMA right there, 25.2, right? So another reason why if we have downside move, you know, that could be sort of the next, you know, tap at that level. All right. So that's my outlook. Other than that, you know, same thing, similar outlook for Ethereum, which is, you know, keep in mind that this could be a bigger range. If Ethereum does whipsaw down, keep in mind, you know, 1700, maybe as low as like 1650 down here, and then push back up as a potential, you know, whipsaw movement back like that. Solana, which is a position that I still maintain in the spot. I think I'm still relatively bullish or optimistically bullish. I feel like I'm one of the maybe very few people who has that, but my conviction is still strong in Solana. I still do believe that, similar to BTC, you know, you may have this kind of like falling wedge developing, and if you have just one more tap down, this thing launches back up. I think at least one of my first sell points might be 27, and then the next sell point would be somewhere around 38 to 40 bucks up here. All right. Other than that, I mean, INJ still looks relatively strong. You know, look out for INJ. This thing has often given opportunities that, you know, look like they're going to collapse back down and break further, but they're really just, you know, gearing up for the next leg up. INJ, Injective, has been kind of looked over by so many people, but our community has been spot on recognizing INJ well below $2. So, you know, once again, maybe a potential opportunity. I won't really be touching or talking about meme coins today because I don't really see that the current market conditions are favorable towards meme coins, but I think there's other good stuff out there that you could be watching. You know, LTC, which is another one. I know their halving event is coming up, so maybe look out for that as well. Let me see here. Lido, we've talked about Blur, another position that I still maintain. Look at that. You know, hot move today on Blur, up about 10% on the day. Fantastic. All right. Oh, gaming tokens are up a little bit, right? GFAL, which I've talked about before, which is a smaller token on BitGet. PYR, again, Vulcan Forged. Everything else is relatively calm. Ooh, AI coins Ori chain is up, nice, 16%. So that's pretty solid too. Keep an eye on Fetch as well as PHB. Okay, that's it, everybody. Y'all take care. Good luck.